What's up, everyone? It's Karthik with MoneyVest. So we got a pre-market bloodbath here in the markets with the S&P 500, NASDAQ, small caps, everything selling off quite aggressively on the back of Amazon, down over 8.5% on missing revenue, beating expectations for earnings. Apple is basically flat after the earnings as well. So this right here is where we are with the pre-market situation, the scenario. As of the time of this video that I'm recording this, we are seeing Amazon down a little bit over 8% so far. Nvidia is down over 3.5%. We got Microsoft down almost 2%. We got the entire index, which is the aggregate index that we have created on TradingView for Mag 7, down almost 2%. So definitely selling off quite aggressively as well. And Google is down over 1.6%. And we've got Netflix down over 1.4%. Tesla is the only one that is slightly pushing higher after, of course, the brutal selling pressure from yesterday. And Advanced Micro Devices is also the only one that is slightly higher. But AMD also got spanked yesterday, down over 8% on the day here. Apple was down 1% yesterday. Meta was the only company, the only lone survivor that was green yesterday, up almost 5%. But even then, it was selling off intraday. So if you come over to semis, also getting absolutely crushed on the back of Intel earnings. Intel is getting destroyed at pre-market, by the way, down over 21% after suspending its dividend. ASML also following through with a down 6% pre-market. Lam Research, TSMC, Applied Materials, all three of these down over 4% each. SMH, a big position for me, down over 3.7%. So it's going to be quite an interesting day today where the markets are going to see quite an incredible start to the day. We've got unemployment numbers coming out in 3 hours, so that is going to be very important. But this right here is the current state of the markets here with IWM, QQQs, SPY, and the Dow Jones. Dow Jones only down 80 basis points. SPY is down over 1% right off the bat. And we've got QQQs down over 1.8, almost 2%, with small caps also down almost 2%. And which one is green? What is green, folks? RSP, also equal weighted index, down almost 80 basis points. And the only thing that is green right now is, of course, your TLT. TLT is your bond ETF, pushing up almost 1% on the day. It was green yesterday, and it's up almost 1% on the day today as well. Always remember, bond market is 3 times as big as the equity market. So for that, even 1% gain is actually quite a substantial number. And a lot of liquidity is once again flooding the equity markets, as discussed in our yesterday's video, as there is markets repositioning a little bit more towards the defensive sides and getting very, very risk averse. And that this is simply nothing but a case of repositioning and reallocation, taking some profits off the table, since we have seen significant rallies for the market here. And this is going to be where we are for the MoneyVest index as of right now, because we've got volatility on the move. If you come over to the VIX, we are now breaching over 20 levels on the VIX, up almost 11%. This is the first time we're seeing the VIX breach over 20 since April of 2024. So April 19th, to be precise, was the day for the high for the VIX was 21.36. So the moment it cracks above 21.36 will be the first time we are breaching above 21, going back as far as October of 2023. So sell-off is not over clearly, and again, we're not out of the woods. As I mentioned before, time and time again, volatility pushing higher is very, very important for us to keep track of. And the MoneyVest index, as of right now, coming down to 3.59. I'm sure this number will be significantly lower once the market opens, because we'll get a nice idea on a lot of other technical indicators, a lot of market breadth indicators that are currently closed because the markets are closed. But as soon as markets open, this number is most likely going to be sub 3.5, as a lot of stocks are selling off pre-market at the moment. And this right here is our volatility spreadsheet, which is also going to make its way over to the MoneyVest platform very soon. But this right here is the current reading on the VIX. So you can see the current read is well over 20.5. 20.57 is where we're at. So this number will get updated. We are in the 62 percentile. So this is where we are. This is quite normal for the markets, and correlation, as we've already discussed, is negative 61, almost 62%. So if you really kind of figure out where we are, we're still somewhere between these two numbers here, right? 17 and 23. So we're nowhere near close to any of these crazy high numbers in the 30s and 40s. So that's why we're still in the 61 to 62 percentile for volatility. So if I essentially scroll back just a little bit more, you'll notice that we are in between these two numbers here, 50 to 75 percentile. So that's why it says 62 percentile at the moment for volatility. But the higher the VIX goes, the higher the percentiles we go to. So ideally, we want to be anywhere over 75 percentile, meaning 23 or higher on the volatility is going to be very, very fewer times we've been there. Meaning that if I show you total observations, so we're basically tracked this volatility for 8,500 days, right? So 8,514 days over divided by 252 trading days, we're going back 34 years. So over 3 decades worth of analysis on volatility. And you'll notice that above 30, the volatility is only spent 721 days. That is only 8.47%. So that's under 8.5% of the last 30 years that volatility has traded above 30. So that is a very, very rare event in the market. So we got to be careful, we got to be patient, and we need to understand that when the VIX breaches over 30 in the last 33 years, it's only happened 8.5% of the times. So that is quite rare, and we will be looking at a percentile which is closer to 95th percentile. So over 30 we'll be at the 95th percentile for volatility, but right now we're in 62 percentile, which is quite normal. So let the markets, let the prices come to you, let the volatility increase a little bit more, breach above 23, 24, 25. Ideally 30 would be another really, really important threshold that we're watching very closely. So that is not that far away, to be honest. It is only another 40-45% increase, and from where we were just a few weeks ago, from the first week of July, volatility is already up over 75% as the money vest index continues to come down. So deploy, in my opinion, there is opportunity to nibble in and start looking at buying opportunities. Again, I want to be very clear, this is not the time of the market where you can just literally go all in and start taking on margin. No, this is only the beginning. This is getting started, right? Over the last 2, 3, 4, 5 days, we have seen volatility increase, markets come down, trade in a lower high and lower low pattern, something that I have also addressed in my previous videos. So this right here is the QQQs. You'll notice on the 30-minute time frame, as I've discussed, lower high and lower low pattern, and pre-market it's making a new lower low down over 1.6%, continues to trade inside this pattern. Same thing with the S&P 500 as well. As you can see, SPY down over 1%, making a new lower low, breaking down below this right here as a support. So be patient, let the prices come to you. These are starting to become very attractive, very good opportunities. And if you come over to our platform, these are the earnings, by the way. You can access the earnings calendar. But what we've also included, which is pretty cool, is this right here. This is going to essentially tell you whether the markets are in a dip, a pullback, a correction, a bear market, or a crash. And S&P 500 right now is just shy of 5% from its all-time highs. I think it's down over 4.99%. If you come over to the S&P 500 here, from its all-time highs of 565, we are down just a little bit under 5%. We're at 4.98%. So we are very close to being in a pullback, just like the NASDAQ, which I believe might actually be in a correction now. So QQQ's pre-market down a little bit over. Yep, so we just entered into a correction for NASDAQ 100. I want to be very clear, this is NASDAQ 100. QQQs are NASDAQ 100. But let me see if I can find the NASDAQ ETF, the composite ETF. Not sure if we have one. JP Morgan, NASDAQ Equity Premium Call. Nope, so NASDAQ Internet, NASDAQ 100. Can't remember what the exact ticker symbol is because IXIC is not going to be open. If we account for, let's say, a 1.5% decline from yesterday's close, we're looking at somewhere around 16,937. So 16,937 is going to put us down over 9% from its all-time high. So still not quite in a correction yet, but definitely approaching that correction level where it's down over 10% from its all-time highs. But NASDAQ 100 very much in a correction, and Magnificent 7, of course, deep in a correction zone, down over 1.5% pre-market. And from its all-time highs, it is down a little bit over almost 12%. And this chart essentially is going to show you everything you need to know about not only individual stocks, but also for indices and sectors as well. So this is going to update once the market opens. So link's going to be down below if you want to, of course, access all this data, all this information. We're going to be adding a lot more features over time, including the Money Vest Index, the volatility analysis, including my fair values. Everything's going to be available on the MoneyVest platform. So you're more than welcome to join. The first week of the month is the best time to take advantage. So get ready. It's about to get pretty volatile and pretty crazy. Make sure that you drop a like on this video, subscribe to the channel. Let me know your thoughts down in the comment section below. And as always, happy investing. I'll see you all in the next video.